Forbes top business women from Asia, and therefore we are happy to have Shikha Sharma of Axis Bank a day after the budget. Thank you, Shikha, for joining us on ET Now.
Thank you.
To begin with, how would you sum up this entire budget?
So before the budget came out and everybody was asking about expectations, the question was really how are we going to get the balance between fiscal discipline and yet spurring investment growth for the country, because I think if we have to get out of the current low growth, medium inflation kind of routine to a higher growth phase, then there is a general consensus that some of the investment will have to be kick-started by public spending. And if you become a prisoner of a fiscal deficit number and you compromise that opportunity for growth and investment right now, then it could hurt in the long run. So I really thought this budget has done a great job of having that long-term focus. The jobs are important, growth is important, fiscal discipline is important, but you don't have to become the slave of a particular number. So moving in the right direction, but aiming for a number which is more pragmatic, I think is first of all, the thing that hits you first, that we've aimed for a fiscal deficit number of 3.9. We have increased the spending on infrastructure, whether it's roads, whether it's kick-starting some of the power projects, privatizing ports. I think those are all initiatives which hopefully will get us back on the investment cycle in the next year to come. So that is one big positive. The second being from the financial services sector, I think the incentives to promote long-term savings through pensions and some of the other social security systems and structures that the government has come up with, I think that was also necessary for our country, and I think that's a big positive. The third is around governance and simplification. So, reducing the processes required to get approval for a business, and most spectacularly saying that a new business can start without getting all the approvals as long as they are operating within the guidelines. I think that's an enabling clause, and I've always thought that one of India's big demographic advantages is the entrepreneurial spirit of the country, and hopefully this will unleash that. And I've seen many more new entrepreneurs in the last decade than in the 2 decades before that. So this coupled with the fillip from government in terms of the simpler processes, the need to not get approvals beforehand, and also the seed capital of about 1,000 crores that the government has put aside for kick-starting businesses, hopefully that will spur entrepreneurship and will result in job creation as well. The other part of simplification is taking away exemptions and reducing taxes, and saying that we are going to discourage black money by making sure that you give people a chance to disclose, but if there is a violation, then you pay a huge penalty for it. I think that's a good move as well. Taking away wealth tax and increasing income tax rates. I think these are all steps towards saying we're going to have a simple tax system, but we're going to have higher compliance. And therefore, you will have a more effective structure. So I think the budget has acted on a lot of fronts, and I'm sure we will see the payoff of it in the times to come.
Okay. Before I get to the macro side, let me first dive into banking. There have been many announcements on banking and insurance piece.
Right.
But on the crucial issue of public sector bank recapitalization, the total allocation has been only 8,000 crore rupees. Now, do you think it's a raw deal for these banks, considering that the total requirement is around 3 lakh crore rupees against the Basel norms?
See, I think this budget to me looks like a very thoughtful and an exercise where a lot of minds have come together to figure out what is the right solution. So I'm just taking a guess out here. I don't know, but the allocation to the banks, yes, is only 8,000 crores. But they've also talked about creating a holding company, which in turn can invest in the banks. So maybe what the government is intending is that they will not directly invest in the banks, but the holding company will, thereby giving a level of distance between the government and the banks and enabling more independent governance structures for the PSU banks. So what in headline seems to be a negative could actually be a positive for the banking sector.
Therefore, capital is not going to be an issue for public sector
Yes,
banks?
I think if the holding company comes through and it raises the requisite money to put into the banks, then capital need not be an issue.
Okay. The other big announcement has been on the bankruptcy law,
Yeah.
the all new bankruptcy law, which will replace SICA and BIFR. How do you think that will impact banks like yours in your war against willful defaulters?
See, one of the challenges that we have is that there's a lot of enabling legal regulation in the country, but when it comes to implementation, we sometimes have lack of clarity on which court you go to and the appeals process. So making sure that we have some unification of that and we have a central bankruptcy framework could actually help faster resolution. I think that would be great in terms of allowing credit to grow, because ultimately for a bank to be able to lend, you have to have confidence on recoverability. So one, allowing SARFAESI to apply to both banks and NBFCs, so that if bad debt is aggregated into an entity and action is taken from there, we can still operate within the SARFAESI law. I think that's a positive. And once the bankruptcy law comes through, it probably allows for some other forms of creative resolution for assets. So I think it's clearly a step in the right direction.
Well, the other question is India post reincarnation as a payments bank. How do you see the impact on the banking industry as a whole? Do you think this will fill in the lack of presence of banks in the unbanked space?
So, India Post already does a lot of postal savings certificates, and I'm sure you would, as you talk to people who maybe domestic help, you will figure out that many of them may not be part of the banking system, but they have a postal savings certificate. So, we know that the postal system today has the ability to reach out to the unbanked. So, allowing that system to be leveraged is clearly a plus, and I think doing it through a payment bank where you can garner the savings in a safe way for depositors, good move.
Well, in the last few months, we've seen that many banks along with corporates have applied for a payments bank.
Yeah.
We've not heard anything from Axis. Are you looking at your entry into payments bank space?
Axis is already very large in the payments space, so whether it is facilitating corporate payments or individual payments, it's a core franchise of ours, and we have invested and developed a lot of capability around that. As a new ecosystem comes up and new business models come up, we'll constantly evaluate what makes most sense for us. But given that it's a core part of our franchise, at this point of time, having a payment bank license is not something that Axis Bank needs.
All right. The proposed monetary policy framework,
right.
Do you think this is going to be a game changer as far as interest rate management is concerned?
Yeah, I think it's an interesting move because, one of the comments that the RBI governor had made is that the RBI needs to work with the government in figuring out what is the right level of inflation to be targeted, and that needs to be part of a holistic economic framework for the country. So, formalizing that process and saying that the government and the RBI together will set what is the appropriate inflation to be targeted for the country, I think is a good way to move ahead, because then you do not have ambiguity in terms of the goal. And once the goal is consistent between what the government and RBI wants to do, then the path forward becomes much easier to define.
Well, many industry leaders like Deepak Parekh have said that investment cycle has not picked up. When do you see industry gathering steam once again?
So, I think one of the things I would say is that if we look at all the pronouncements that have been made over the last year and including in the budget, I see one consistent message across all of those announcements. We see a message of pro-growth, pro-jobs, and yet protecting the poor. We see a consistent message around simplification and reduction of procedures. So, I think the intent and the direction is all very clear. Now, we can always argue about the pace of change, and in a complex country with a lot of things to be done and a lot of external environment factors coming in, it's always difficult to precisely predict when is what going to happen. And to your question on when is the investment sentiment going to change, I can't tell you whether it's going to happen next quarter or 3 quarters from now, because there are a lot of factors that go into it. But as I said, I'm seeing a couple of trends. One, a clear policy statement which is pro-growth, pro-jobs. Two, the global macro has actually been good for the country, because with oil prices coming down, our fiscal is in a better position, our current account is in a better position. So, we have more room to kickstart investment. We are seeing some of the projects which were stuck getting to move ahead and getting unstuck. The coal auctions, I think it's a big positive. So it's going to help a lot of the stranded power projects to become effective and to start moving again, which in turn has a big multiplier effect on other industries, because if power is available, then capacity utilization in other smaller industries can go up. So I'm seeing a lot of things move in the right direction, and the budget has put a little bit more money in the hands of individuals through some of the tax breaks that have been given, and also through some of the initiatives around rural incomes. So hopefully we will begin to see consumption pick up as well, and therefore I feel pretty optimistic about the trends for the future. Difficult, as I said, to predict exactly when investment will take off, but we see it moving in the right direction.
Okay. On the infrastructure side, 70,000 crore rupees set aside. Do you think this is going to infuse life into this all-important sector?
70,000 is actually a fairly decent number to be spent within a year, and it can have a huge multiplier effect, because it will mean that there will be more jobs created, it will be more cement being used, probably more steel being used, and that in turn will have a multiplier effect. So I think if we actually execute and spend that money, it will definitely have a big positive impact.
But that's as far as new projects are concerned. But what about existing projects, and what's the kind of impact the announcements made on the infrastructure is going to have on balance sheets like yours, considering that a lot of existing projects are stuck?
So on existing projects, there are basically two kinds of projects that have been talked about a whole lot. One is power, and on power we're seeing a movement on coal auctions, and I think that's a big plus. On roads, where the PPP model, there were some questions around that. We need to come up with a new model. So in the interim, if the government is going to kickstart roads by doing public investment, I think that's a good way to start off roads. And also the budget talked about a process for resolution of commercial disputes. Now I don't know whether that's also going to cover disputes that may exist between the private sector and public sector on payments, but if it does, then that could be a good resolution mechanism which will help some of the monies which are stuck in the system.
So therefore,
and create capacity for further investment.
Okay, so therefore what's your outlook on asset quality and the restructured book? Do you foresee a scenario where we could see far more slippages on the restructured book?
So we've for a long time, even in 2009 when we raised capital, we had said that 20 to 25% of the restructured book could potentially slip into NPAs. Since then we've had a couple of years of low growth, but based on the numbers that we see, we believe that slippage should be within that range, more or less. So we don't foresee a situation which is going to result in a much higher slippage from restructured to NPAs. And in all the guidance numbers that we've been given, we factor in whatever we are seeing on the book, including on slippage from restructured to NPA.
Well, on that note, let's take a short break. On the other side, we'll ask Shikha on some of the macro issues in the budget. Stay tuned to ET Now. Welcome back. You're watching the interview with Shikha Sharma of Axis Bank. Well, looking at the macro side, there have been many giveaways on the fiscal deficit. Considering Governor Rajan's insistence on the quality of fiscal consolidation and on the absolute number, do you think the resetting of fiscal deficit target will have a bearing on interest rate cuts?
So I think the RBI governor, if I remember right, he said somewhere that it's not so much the fiscal deficit number that he's concerned about, but it is the quality of the spending, yeah? And whether the spending is going to go towards creating more capacity and there's going to be more capex rather than having a large revenue deficit. And I think on that the budget delivers. So we are seeing most of the additional spend has gone into capex, and therefore hopefully should help create capacity.
So you're not expecting any interest rate cut in the near future?
No, I think the general consensus amongst most economists and bankers has been that we should see a rate reduction of about 75 basis points during the year. We haven't revised that guidance at this point of time. So that's our expectation, that yes, rates should fall sometime during the year.
Well, you spoke about consumer demand. Well, in this budget, there's not been much of an announcement on reviving consumer demand. In fact, there's no extra money put in the hands of the consumer. So, do you think the FM is largely relying on interest rate cuts to revive consumer demand?
No, I think there are a couple of announcements around putting more money in the hands of the rural economy by some of the schemes that the government has announced, and they have announced some tax incentives for families with incomes of less than 5 lakhs. So that does leave a little more disposable income in the hands of individuals, and I think generally if the sentiment is good, it always also results in consumption increase. So I think those factors put together hopefully will bring consumption back.
On the gold monetization scheme, what's the kind of impact that you see on banks?
I haven't seen the fine print of the gold monetization scheme, but if we are able to leverage the unproductive gold which is lying in the country and bring that back and substitute part of the import of golds with monetizing gold which already exists, I think that's clearly good for the current account deficit, and from a bank's perspective it allows us intermediation into another product class, so it can only be good.
Okay. The other big thrust has been on a cashless society.
Yeah.
How do you think this will impact or this will play out for banks, tech savvy banks like yours?
So yes, actually I forgot to mention that, but I think that's a huge positive because if you aim for higher tax compliance and you encourage digital money rather than cash, then you're again simplifying the system, and it also means that there are more incentives for money to flow through banks, and we see that as a big opportunity, especially for a bank like ours which has been focused on the payments business and which has been a leader in a lot of the card innovations. So we clearly see that as a big opportunity.
Okay. The other announcement has been the government has removed the distinction between FDI and FII, which is a big positive for Axis Bank. Do you therefore see this has created a larger headroom for more investments into the bank?
I think this is again in that category of initiatives which have been taken to simplify, and basically all friction which was not adding value has been removed, and therefore I think it's a positive move, because I never really understood why you would make a distinction between FDI and FII and create barriers to free markets. So I think from a policy perspective it's a great move, and yes, it probably creates more capacity for FII investment to come into some of the sectors including banking.
So are you still looking at an ADR listing now that this announcement has come, or that is ruled out completely?
So we don't have any compulsion to do an ADR listing at this point of time, because one of the reasons to consider the ADR listing was to be able to leverage the FDI capacity which we had. Now that it's fungible, we don't have to export our capital markets. We can actually let investors come and invest in the domestic stock. So we will be open-minded about that and see if there is a need for an ADR and our investors feel that they like the liquidity of the ADR, we may consider it at some future point, but there is no compulsion as of now.
What's your take on Mudra Bank? Do you think this will reduce your load when it comes to financing small and medium enterprises?
The Mudra Bank, as I understood it, is primarily for refinancing. So I see it more like a NABARD equivalent for small and medium industries, and I see it as an enabler therefore, rather than a direct competitor of a bank like ours.
But the finance minister has earmarked SUTI for divestment. Considering that SUTI holds a considerable amount of stake in Axis Bank, what are your thoughts on this?
The SUTI currently holds about 11.7% of Axis Bank, and they've been a good shareholder, and now with the FII limit for the bank, which could potentially go from the 49 to 74, our current total foreign holding is just 52%, including the FDI. So there's a lot more headroom for investors to come in and buy the stock. So if the government chose to divest, I would expect that there will be enough investment appetite for that, but it's for the government to decide whether they want to divest and whether they want to divest.
Insurance is the missing pie in Axis Bank. What's your sense? Would you look at getting into this space?
We've always said that, we believe that there are lots of growth opportunities for Axis Bank within banking itself, whether it's around retail banking, small business banking, or corporate lending, bond markets, infrastructure. So we think there's enough growth opportunity within the bank itself that we don't want to get distracted with businesses like insurance. We are happy to distribute the product and cater to the needs of our retail customers, and for that we have always chosen to partner with manufacturers of insurance who have customer friendly products and services. So right now we are pretty happy with that model.
Okay, so what's the next big growth driver for Axis? Are you relying on retail to push growth for Axis?
So if I look at the journey of the last 5 years, it has been about filling out the product suite for retail customers by strengthening our investment management offering, by strengthening our retail loans, and by strengthening our card offerings to customers. So I think in all of those spaces we are very happy with the traction that we have seen. On the retail customer right now, it's our objective will still be to give best of breed advisory services, to have the best payment solutions, whether it's cards or other digital forms, and have a full offering of products to our retail customers. For corporate customers, we were always very strong on bond syndication, on project finance. We post the acquisition of ENAM, we now have a full suite of advisory services to corporate clients, and that's doing well. So now that markets have come back, we are seeing the benefit of that particular franchise come through. And we have also, as I mentioned earlier in our conversation, invested a lot around payment solutions and payment infrastructure for corporates. So we think there's a lot more opportunity on all of those. So the focus is very much going to be how to deepen that capability and grow that capability.
And finally, what are the 3 things that will define 2015 for Axis Bank?
We are excited about the future, and we therefore think growth is going to come back. From what we see, government wants to encourage bond markets, so we think we are well positioned for that. We are well positioned on the equity market space as well. So I think the defining features hopefully will be growth coming back, are leveraging our markets capability as markets open up and grow, and are leveraging our digital capability as more money gets digitized.
Well, thank you, Shikha Sharma, for joining us on ET Now. Thanks a lot.
Thank you.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.